So what happens after the U.S. government shutdown? Hey traders, my name is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video. We're going to talk about all the events that could be moving this market this next week. We're also going to go back and talk about, what will happen or what could happen to markets after the government is done being shut down, whether that's this weekend or this next week, could be soon. And we're going to talk about, like I said, all the events that could be moving this market, whether we're talking about Aussie employment, UK jobs, UK GDP. We actually have US inflation data and retail sales that are slated to come out this next week. And even if the government reopens, I'm not sure we're going to get that data this next week. And we also have some bank holidays. So we're going to talk about all that and more. I'm not going to be joined by Nick from Trading Analytics and Pelican today. He will be back this next week. He's busy doing some other things for Pelican. So it's just going to be me. And if you like these videos and you think they're really helpful for you getting ready for the next trading week, make sure you give us a thumbs up. Give our team a thumbs up for getting these out to you. We've been doing them for about 10 years. So subscribe to the channel so you don't miss any of these exclusive videos only found here on the ForexAnalytix channel. And it's free to subscribe. And comment down below. If I miss something, do you think there's something that's going to be really important that moves the markets? Just jump down in the comments below and let us all know. All right, let's kick it off with next week and what we're looking at. And you can actually go to the calendar on ForexAnalytix if you want. You can adjust all the dates and see everything that's coming up. That's going to be located 2 tabs over from your live Squawk feed. And, we're going to talk about different instruments. Now, remember, at ForexAnalytix, we cover, things like Bitcoin. We cover the dollar index. We have, you can see we cover, the 10-year. We cover boons. I mean, we cover, it doesn't matter, a lot of different markets, not just currencies. And that's why we spend the weekend video talking about everything that could move the market this week, because it will influence not only currencies, but the currency market is the largest market in the world, and it tends to influence every other market as well. All right, so next week, when you're talking about the calendar is actually fairly light. One of the things, I should mention this, we are getting an exorbitant amount of Fed speak. And I think this is, the Fed chair's way of making sure that, there's communication to the market, keeping the markets calm. One of the mandates for the Federal Reserve is price stability. So by marching out a lot of Fed members talking about the economy, it gives people better optics on how to read the economy. Because right now, as you all know, because of the lack of economic data, we're all kind of flying blind, at least here in the U.S. But that's not the same as everywhere else. Matter of fact, I'm gonna take us over to sterling, because sterling is going to be one of the major events that we're going to get early next week. Is we're going to get the UK jobs report Tuesday morning. So the thing about sterling, and we were talking about this, remember, I should thank Grego Horvat for doing last week's week ahead video. I was in wine country in the United States, which is Napa Valley, last weekend. So Grego Horvat, he stepped in and did the week ahead video. So thank you very much, Grego, for facilitating that. Like I said, I want to talk. So these charts are a little bit, they haven't been drawn on for 2 weeks. As you guys know, I only do these videos, or I only draw on these charts for you guys. So yeah, you could see a couple weeks ago, we got a bounce right off the wedge support, which we thought. But you know what's interesting? Let's take these lines away, and what you're going to notice is sterling bounced off of channel support. That I find is really, really interesting, which is this red channel that you can see here. Now, one of the things about sterling I do want to mention, and you can see this is channel support, if you will. Positioning, I think, is pretty poor in sterling right now. The reason why I say that is because, it was poor this week. A lot of traders were short because you have the labor budget coming up, and I think a lot of people have been leaning into sterling as a result. But what we see is we have sterling with a false little breakdown. I guess you could call that a false breakdown. I would actually just rather look at it as more of a, channel held. Probably the channel looks something like this. And for right now, it looks fairly constructive. What I would be really focused on intraday with sterling is I would be looking at this 38% retracement, which is not too far from where we're at. So the 38% retracement you can see is right here at 131.85. That's the level We noted that level this morning on ForexAnalytix on the bias chart. You can see we developed this bias chart with our traders each and every week. And you can see 131.85, really important level. That's why we highlight it with an asterisk down there. And by the way, if you are a ForexAnalytix subscriber, during the morning edge, we do this each and every day with our traders live. So you guys can see all these different instruments and where the important levels are, so you know what levels to trade against. Well, the 38% retracement, as you can see, comes up right at that 131.85, and I would say that there's a risk that we squeeze even further than that. You'll notice if you go a little closer intraday, we have an inverted head and shoulder pattern that's developing, and it looks something like this. So there's a good chance that we could continue to squeeze higher in sterling, not only to the 132.50 level, maybe even a little further. And like I said, there's a lot of people that are short sterling. So if you look at, just an approximation of where that could go, that's going to take us back to that 38% retracement. So somewhere around there, just in case the sterling continues to squeeze, because it's not just the UK jobs data this next week. Because if you look at Thursday morning, we're going to also have UK GDP. So as long as the UK economy is not doing horrible, you might see a continued rally in the sterling. Now, obviously, if the data turns south, and especially if we stay below this 38% retracement, it's going to be pretty pivotal. So you can see from here, you got rally potential or a potential reversal, and I'd say we're pretty close to a big pivot. Now, what else is happening this week in the rest of the world is you have the Aussie and you have employment data that's going to be on Wednesday. Now, I'm gonna take a step back and do a little bit of work with the Australian dollar and I obviously haven't drawn a lot on this chart for a while. So let's get rid of that. And you can see the, Gartley pattern did hold. So let's remove that. Let's remove this, and this. And what you're going to notice here, and let's take it to a daily chart. And I'm going to stay on this weekly, actually. If you look, this is that long-term broken trend line. But the problem that I'm having with this trend line here, if you zoom out or pull that trend line up a little bit, we could actually argue that this trend line is holding. You see what I'm saying? This is like a longer term argument of like, okay, well, if we can't rally from here, where the hell's the Aussie going to go? And that's the question I kind of ask myself all the time is, look, we stock market has been at all-time highs. We see a continued rally in equities. Precious metals have been strong. How come the Aussie has not reciprocated? If you're a bull longer term, you got to be thinking about that. I know I think about it. And so if you go over to the daily chart and you really focus on the daily, you'll notice a couple things. I'm gonna leave you with this. And by the way, again, I'm repeating, especially if you're a ForexAnalytix subscriber, you know exactly what chart I'm going to be bringing to you. Right now, it looks just like this. You'll see I'm going to almost replicate that, and you can find that on ForexAnalytix updated every single day. So if you take this trend line across the bottom, you see those lows, right? And what's right below that? It's the 200 DMA. See, my problem is if we break this level, this is going to be extremely bearish. And let's not forget, we're not very far from that. Now, what could, and I want to ask you a question. I want you guys to think about it, even though you can't answer me right now as I'm live and you're watching a recording of this. What could actually push the dollar up this week? We're going to talk about it here in a second. Well, how about the government reopening? If the U.S. government reopens, would that not be bullish for the dollar? So I'd be thinking about that, because if the Aussie does break the support and you see us break through the 200 DMA, I think there's going to be a bigger retracement in store. So if you go from the lows, that spike low over there, to this high right here, you're looking at a move that could take us down into the lower 60-cent level, whether it's 63 cents, whether it's 62 cents. I think the downside will open up below the 200 DMA, and I think it's something that everybody should be looking at. Now, one of the other things that we're going to be asking ourselves is next week, like I said, the U.S. government is shut down. Now, there's I'm heading into the weekend. We're filming on a Friday. You can see President Trump just said, U.S. President Trump, inflation is at a perfect number. 3%. I would say 2%. You know, for the less the 99% of the rest. But anyway, that's neither here nor there. The thing is it's Friday, and what's happening on Friday and as we head into this weekend is people will be discussing what's happening with this government, and there's a lot of push and pull between the Democrats and Republicans to get some sort of spending bill pushed through to reopen the government, and if that happens, the dollar could reciprocate, and we could see equities really respond as well. So the question I asked when I first started this video is, what would happen after the government shuts down? Well, my opinion is going to be threefold. We're going to see a recovery in equities. So we're going to see the equity markets recover a little bit. I'm going to go over to the S&P in just a minute, so we'll look at that chart. So make sure you stick around for that. The dollar will also reciprocate. I think we'd see the dollar actually rally a little bit too. I'm going to talk about the dollar index here in just a minute. Matter of fact, I actually want to go over the euro and show you that. But the third thing that I think would happen is gold would fall. Now, a lot of you are like, well, wait a second, gold's going to fall. Yeah, because I was explaining to our traders on the Morning Edge today, which, by the way, the Morning Edge is a private show that we do. That's when we create the bias chart that you see here. But it's also a private show for our traders, and I talk, myself and Steve Valgueres, we talk about all sorts of things that could be moving the market and a lot of different instruments. And one of the things I was talking about today is gold. People buy gold for a lot of different reasons. They buy, we can list off a multitude of reasons why gold has rallied quite substantially. But one of them also is because the government shut down, and it's out of fear that the government shutdown is going to be prolonged. Well, if it does get reopened, I think gold will fall naturally. And one of the things about gold, and I'm going to take you over to gold really quick, that I have a real big problem with, and you guys have seen this chart, right? We talked about the rally, the throwover of the channel, the breakdown, and now what you'll notice here, once we completed that double top, yeah, that was a double top. We talked about it a couple weeks ago, right? Double top, completion, we completed it. Now it's going to be a little messy. Well, it has been. But what's interesting about it being messy is this chart is actually showing a consolidation, and a bearish one at that. Given the fact that we have not even been able to rally during the shutdown, suggests to me that the downside is more at risk. And again, if you think about it and you put two and two together, all right, if traders have been buying gold because of the shutdown, if the shutdown is over, what happens then? Well, I think gold does resume that downside. Now, do I think that gold's going down, to back to 3,000? No, not even a little bit. But do I think that gold, can trade down a couple $100 from here? Absolutely. And I think that's what the big risk is right now, that gold actually trades down towards 37, 35, 38, 3,600, 3,500, somewhere in that neighborhood. So keep your eye on gold. Now, I said I was also talk about the dollar. Let's go over to the dollar index really quick, because I think that the dollar would actually recover. And what you'll notice with the dollar index, and remember, this is one of the only charts that I use universally for not only the week ahead video, but I use it for the daily updates. I do it with the Morning Edge and the F.A.C.E show. So you'll see the same chart right here, right? Whether you're looking at a 4-hour chart or whether you're looking at the daily chart, you're going to notice the same charts. One thing I want to talk about as far as the daily chart goes, the dollar index stalled at the 200 DMA and also horizontal resistance, right? So you got horizontal resistance and you got the 200 DMA. Now, if you break above that, that's when it becomes really bullish. Now, I don't know if a government reopening is going to put us right back into breakout territory, but what I do think happens is that we do rally off of this support. So in other words, we're going to rally off this triangle support, and we're going to make another run for the 200 DMA, if not higher. Now, I told you that I wanted to show you the euro as well, and I do want to show you the euro because I think the euro is coming right back, and you guys can see it right here because I drew this out 2 weeks ago. It's coming right back to the underside of that broken triangle, which comes in around 116. See, I think the euro is actually set up for a decent short right now as I'm recording this. However, most of you aren't going to see this till tomorrow anyway. But the thing is the dollar, or excuse me, the euro still looks bearish in my opinion. Andre, our harmonics in-house analyst who does all the harmonic analysis on ForexAnalytix, and you'll see it right here. Like if you go to dollar Canadian, for example, hit harmonic analysis, you'll be able to see how he's viewing different currencies and different instruments, all 30 instruments that we cover. He updates through there. He's talked about that the euro just completed a butterfly pattern. However, the butterfly pattern would look like this. That is a butterfly pattern towards 127% extension, which would be, right around this level right there, right? You can see it would be actually a little bit less than that, about right there. And we got a bounce. However, I think the butterfly pattern goes a little further. I think it actually takes us to the 161% extension, which would be somewhere right around this level. 261% extension, 161% extension, which would also match this horizontal support, or very, very close to that support. So, see, I don't think that downside is over in the euro yet. Are we getting a recovery from the original butterfly pattern? Yes, we are. Right where Andre was thinking, and let's zoom in a little bit so you guys can see a better view of that. So we got a recovery here at this butterfly, but I still think that this will roll back over to retest these levels down here around the 113, 114 levels. So, like I said, I think there's more to go in the downside, especially on a government reopening. Now, could there be a reopening as early as this weekend? There absolutely could be. Like I said, there's a lot of pressure being put on our legislators here in the United States. Travel is starting to become limited, and we've got the Thanksgiving holiday coming up. Actually, there's a bank holiday this week. There's Veterans Day. People don't travel for that, but that's going to be on Tuesday. And by the way, happy Veterans Day to all of the veterans, all of you veterans that have served in your military, no matter if it's in the United States or your own respective country. Thank you for protecting freedom, all of you out there. And then also to my Marine brothers and sisters, you devil dogs, happy 250th birthday to you on Monday. Marines, those are my people. You are my people. All right, so happy birthday to you. So again, there's a lot of things that could move here in the markets should there be a government reopening. Talked about gold, talked about the dollar. How about the S&P? Well, the S&P, as you can see here, the S&P is recovering off of some support. Now, I want to talk a little bit about the S&P, and don't worry, I'm going to go into other markets as well. If you're in the ForexAnalytix chat room, you've seen this chart already. Simon had been talking about it. K-Man had talked about it, and I'll have to just get over to this is just Friday morning, guys, in the ForexAnalytix chat room. You want to talk about a chat room where there's a lot of conversations going on about everything and anything that could be moving the market. This is all this morning. Okay, so here's the previous channel I was looking at on the S&P, but we made some adjustments. We made some adjustments to that S&P chart. This is what K-Man was looking at, and we're coming down to these spike lows. You can see right here. I noted it earlier, and by the way, Simon talked about it yesterday on Thursday in the chat room, but you can see I've also mentioned that chart, and guess where we're bouncing from right now? So we're bouncing from that level, as you can see, that we were discussing. So let me make a few adjustments here on the chart so you guys can see what we're all talking about. So there's the upper end of the channel, there's the lower end of the channel. Let's remove some of these things for us. And you'll notice there's a 618 retracement right where? Right there, right around this horizontal support. And see what happens is you break through support, right? You break through support just enough to squeeze some shorts out. That's what happened right here. Or squeeze some longs out. You spike right into the trend line. Then if you get a government reopening, the next thing you know, we have recovered. Now, I do think, and I want to stick with this chart here for a second, because I do think that the S&P has given us what we call a throwover. So let me zoom out a little bit more, and you guys can see this. Let me just draw it out for you. Okay, and let me delete this. I'm going to keep it in black, though, so you can see the difference on what I'm looking at here. Okay, here's our rising channel. Kind of looks like that, right? So you got a false breakout of the highs, and that's called a throwover. That means that we are going to eventually break lower in the S&P. So what do I mean by that? Well, or what do we do with that information? Well, for me, it's really quite simple. On a rally, once the U.S. government is done being shut down, we're going to sell into strength. So we're going to be looking for levels up here for a potential short in the S&P. All right, so I want you guys to keep that in your mind as we head into the rest of this video. So you know what's also picking up with this video, or with this market, is volatility. Volatility is on the rise. What's the best thing to do with volatility is, for us as traders, we love volatility. It makes it easier for us to navigate in and out of the markets. It gives us a little bit more a room for error, because the markets are giving us two-way price action, gives us a little bit more flexibility as far as getting in and getting out of the market. But the best way to take advantage of it is with the trader funding program. So if you're not familiar with the trader funding program, sit back, watch this 2-minute video. You can just go right to our website, right? Just go to ForexAnalytix.com, and you can click right here where it says don't trade your own money, trade ours. And then you just click that link right there, and it'll take you right over to the trader funding program. But sit back and watch this 2-minute video, and I'll be right back. Are you looking to get funded as a trader? Why would you want to get funded? Well, the markets are extremely volatile. There's a lot of great opportunities, but you know, because of the volatility, you don't want to risk your own money. You'd rather risk somebody else's money. That's why traders get funded. At Trader Funding Program, we have 2 different options that you can choose from. One, instant funding. That means immediately you can access up to $100,000 in capital. Now, by doing that, you have risk parameters you have to follow. You can't lose more than 8% on a trailing basis. That means as you're making money, you can't lose more than 8%. You also can't lose more than 5% intraday, because we want to make sure you can control your risk. That is your instant funding program option for you. But let's say you wanted to take a more economical approach. You can access up to $1 million with the one-step assessment. Now, the one-step assessment, that means that you can't risk more than 6% of your high water mark to pass your assessment. That means as you're trading a demo account, as you make money, you can't lose more than 6% with an unlimited amount of time. Once again, you can't lose more than 5% intraday, because we want to make sure you can control your own risk. Now, with either option, you have the ability to keep up to 90% of the capital that you make. 90% of your returns. That's pretty awesome. You know what else is great? With either one of those options, you get included in the ForexAnalytix community for a certain period of time. The ForexAnalytix system does analysis on 30 different instruments, everything from currencies to gold to indices, and it gives you different trade ideas, analysis, live squawk feed, so you're up to date on news. You have risk management tools, everything that you would need as a trader in your toolbox to help you become successful. But more than that is you're included in the ForexAnalytix community, the private chat rooms where you have access to me and other analysts from ForexAnalytix. Imagine being able to see what I'm trading, to be able to talk to me and other analysts and other traders and see what they're doing and ask questions. Why trade alone when you don't have to? You should utilize a company like Trader Funding Program for your funding needs. So check out Trader Funding Program for more information. I'll see you soon. And you know, the thing about Trader Funding Program, and you know, that was mentioned in the video, I just want you guys all to know, you can take a one-step assessment or instant funding. If you want to get capital right now, you're like, I just want more capital to trade. You can do that. You have to follow the TFP very, very simple rules, but you can get instant funding, or you can take a one-step assessment. So remember, you have 2 different options. Take advantage of those and take a step back and learn a little bit more about the Trader Funding Program. All right, guys, I'm going to go through a couple other things that I think are important as we go into this next week. We talked about the S&P, we talked about the dollar, we talked about gold. But I want to talk about what's happening in crude oil, because crude oil is one of those asset classes that I think is very, very much right now should be in the spotlight. And now I'm going to go to crude if I can find it. Okay, here's crude. The one thing about crude oil, what you're going to notice is crude oil is extremely weak. Now, crude, there's a level that is really important. We talk about it all the time. It's around this 55.50 level. The reason why this is so important is because this is where frackers in the U.S. have really kind of drawn the line as far as, it's kind of like the boom bust level. You get below 55, you start getting below 50. That's where frackers are going to come offline. Their margins aren't big enough. And so we're not going to produce as much. And if we don't produce as much, some of our frackers are going to go out of business, obviously, but prices will naturally start to bounce after that because supply will be limited. So that means prices will end up going higher. So it's kind of like you start dropping below 50, the chances of it staying below there are just not very good. However, if we start to see recessionary data, whether you're talking about in the United States or abroad, that is where things are going to get a little bit more dicey for crude oil. So if we are starting to see labor markets turn lower, you're starting to see a risk of recession, whether it's in the United States or globally, then that's when we have to start being really focused on downside. See, I think the way the price structure is with crude, it seems like to me inevitable that we eventually break below 55. But that doesn't mean we're going to do it today or tomorrow or the next day. The fact of the matter is if we break above the 618 retracement, we are going to get a squeeze back towards 70. So I'd say, above 63, it becomes a little bit more bullish, and below 55, it becomes really, really bearish. Again, I think it's something that is not necessarily should be on your radar right now. It's just something you should be keeping on your screen pretty much at all times. I also want to talk about Bitcoin and crypto in general. One of the things that Bitcoin is really good at is identifying risk. And what you're going to notice here in this previous bull flag pattern, we didn't complete it, even though we hit new all-time highs. We hit new all-time highs and we failed, which that is never a good sign. Whenever you hit new all-time highs, like you saw right over here, let me move this right here, you see new all-time highs, then you get a failure. When you get a failure at all-time highs, that usually means a false breakout, means an eventual breakdown. So this $98,000 level is pretty important. We break below that, I think we're going to be trading back in the 90s and quite possibly even lower. So if you look at this low right here, that's when we hit 75,000, right? It's the major breakout point. And you can see we're sitting at about a 50% retracement. We start below 98,000. That's going to really open up some downside in Bitcoin. And it's not just Bitcoin, it's Ethereum. My colleague from Pepperstone, Chris Weston, many of you know him from the trade-off show that we do every week. Chris and I were talking, and he mentioned that Tom Lee from Fundstrat is really underwater in his Ethereum position. I mean, institutions, let's just remember there was a lot of news flow months ago right here above 4,000 that a lot of institutional money was buying Ethereum. That's where all those that big move and that breakout was developing. Well, as you can see, we are about 25% below those levels. I mean, if you just take the median average of where we are at, you imagine funds getting long right around here, so right around the median. I mean, we're down, well, I mean, I just did 30%, but roughly about, just say median to where we're at right now, we're about 25% off those levels. So you imagine if you have, think about that, you have $100 million in crypto, or had $100 million in crypto. Now you have $750 million in crypto. I mean, that's a big haircut for your investors, right? So you think about all the institutional money that was chasing Ethereum, Bitcoin, higher. What happens if they come apart and we see risk come down? I mean, I'm not saying it's going to. I'm just saying that these are good risk barometers. So if you start to see Ethereum and Bitcoin really start to break down, that means that's probably some hedge fund that's getting out of positions, and they'd rather get out of that than maybe get out of their NVIDIA or Intel or Microsoft or whatever they're in. So it's something worth noting. Also, I wanted to talk a little bit about the DAX too, because the DAX has been a market that has outperformed. If you remember the beginning of this year, I said that, European indices are going to outperform US indices at the beginning of 2025. Well, that has happened. I mean, if you want to match up, well, I mean, I guess maybe it kind of hasn't completely happened. The S&P has actually done a little bit better, but what you can see is the S&P is, if it starts to roll over, the DAX is also threatening a rollover too. But I do think that if the S&P breaks down, I don't think the downside in the DAX is going to be as aggressive. But you can see it technically. The DAX is in a range. The range looks like this. Okay. And, if you look at a range, simple range extension, yes, could the DAX pull back? Sure. Could, if the S&P pulls back, aggressively, could the DAX pull back as well? Sure, it could. But I think its downside, once again, is fairly limited. But what I wanted to point out today is that we are really, really close to support. All right. I'm trying to think about, when you're talking about earnings, the big earnings aren't really, we're pretty much past all the big earnings, but I want you guys to take a look at NVIDIA, because NVIDIA is going to be really important. We had a big false breakout right here. False breakouts lead to what? I don't know. I just said it a little bit ago. They tend to lead to breakdowns. Now, November 19th is when NVIDIA reports earnings. I believe it's November 19th. You guys can correct me in the comments below if I got that date 1 or 2 days off. I believe it's November 19th, which will be Wednesday. That's when NVIDIA reports earnings. If we break through these levels, this is when the S&P really comes under pressure. That's when the NASDAQ 100 really comes under pressure. Those are levels that I think we need to be looking at in the event that we see, the stock market rollover, the NASDAQ, the S&P, post-NVIDIA earnings. Those are going to be the levels that will be in focus for myself and probably the rest of the market as well. All right, guys and gals, at this point in time, I'm going to talk about, the trade setups from 2 weeks ago, but I'm also going to give you the top trade setups for this week. Now, I say 2 weeks ago because I wasn't here last week. So you have to imagine, if I gave them to you last week, I'm kind of factoring in what's going to happen the following week, right? But again, I was out of town. So let's talk about trade setup number one. I know you guys love this. And by the way, if you guys love these videos, make sure thumbs up would be great. Subscribe to the channel. It's free to subscribe. It's free to comment. It's free to give a thumbs up. It's free to interact with our videos, because when you do, you just help promote our videos by simply just subscribing and giving us a thumbs up. So I appreciate that. All right, let's go to this setup. So 2 weeks ago, short the euro dollar below the 115.75 level. Well, what happened 2 weeks ago? We were looking for a breakdown through the triangle. Once we broke 1575, that was over the next week. Let's figure that out. Over the next week, so broke down through 1575. That was about a 100 pip move. Not bad, right? So did that trade setup work? Yes. Now, we spent this week recovering, but a week ago, that was a pretty good trade. So we're going to mark that up as a win, number one. Number two, long dollar yen while above 152. And I drew it out for you. Long dollar yen while above 152. Once we got above 152, that was last week, above 152, that was about a 240 pip move. Now, we spent, the last week and a half kind of pulling back a little bit, but did that trade work? The trade worked pretty well. So trade setup number two was good. Trade setup number three, sell gold at 41.50 to 41.85, target 39.60. This is from 2 weeks ago, guys. So 2 weeks ago, sell gold at 41.50. Well, crap. We made it as high as 40.46. Oh, 41.50. No, all the way up here. And by the way, I should probably do this with gold. One thing I want to tell you, shallow retracements. We're not even able to get to the 38% retracement. So I was looking for a move back up here to be on the short side, somewhere up here. That didn't happen. That did not happen. So, you know, a lot of times we prepare for trades. They never get to the levels that we want to. So 2 trades work. We call that a scratch because it didn't not work. It just didn't get to the levels where we hoped. So 2 trades worked. One's a scratch. 2 weeks ago, those are some pretty good setups. So the question you might have is, what are my setups for this week? Trade setup number 1. I am looking to sell the euro dollar on a move to 116. So yes, I'm looking for a 116. Failure at the underside of this triangle. Failure right there. You'll notice that that's about a 618 retracement right here. So I'm looking for a failure right around the 116 level. Okay. That's trade setup number 1. Trade setup number 2, shorting Bitcoin. Ooh. I'm looking for Bitcoin to be on the sell side between 104 and 105,000. So on a government reopening, I'm looking to sell Bitcoin somewhere around these levels for a move right back down. So I'm looking to short Bitcoin between 104 and 105,000. Trade setup number 3. Sell gold when or if the U.S. government reopens. So I talked about that trade when or if the government reopens. And this is something that if you were in the ForexAnalytix community, you already know about this because I've talked a lot about it already. If the government reopens, we're going to basically look to sell gold. Because I think gold, that's where you're going to get your next leg down in gold. So guys and gals, if you appreciated this video, you think it was beneficial to you, and you think it's going to really, really help you get ready for this next week, make sure you give us a thumbs up, the whole team, for getting this video out to you so early. Make sure you jump down in the comments below if there's something that you missed, or if you wanted to wish other veterans globally happy Veterans Day, you could do that as well. And then also subscribe to our channel. It's free to actually hit the subscribe button, so this way you don't miss any of these videos. I want to thank you so much for spending your time with me. I hope you have a restful weekend. I will see you on the Monday morning F.A.C.E show, as I do every Monday. See you there. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.